Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louie, and I'll be guiding you through the latest news and trends in the financial market. Today, we're looking at three different companies that have been making headlines recently: Ouster Inc., Walmart Inc., and Walmart's peers in the retail space. We'll start with Ouster Inc., a company that specializes in LiDAR technology, which has been gaining traction in recent years due to its potential applications in various industries such as autonomous vehicles and robotics. According to recent reports, Ouster Inc.'s stock has been performing well, driven by the company's strong financial results and growing demand for its products. The company's acquisition of Sense Pharmaceuticals has also expanded its product portfolio and strengthened its position in the market. However, some analysts have raised concerns about the company's valuation and the potential risks associated with its investments in emerging technologies. Next, we'll move on to Walmart Inc., one of the world's largest retailers. The company has been working to transform itself into a more diversified platform, combining retail, advertising, memberships, data, and e-commerce. Its recent financial results showed strong revenue growth, driven by its e-commerce business and higher margin revenue streams such as advertising and membership income. Walmart's ability to navigate a challenging retail environment and adapt to changing consumer behaviors has been impressive, and its investments in digital transformation and data analytics are expected to drive long-term growth. However, the company still faces challenges such as tariffs and potential disruptions to global supply chains. It's also worth noting that other companies in the retail space, such as Target Corporation, have also been making significant strides in their digital transformations and omni-channel capabilities. As the retail landscape continues to evolve, it will be interesting to see how these companies compete and adapt to changing consumer behaviors. As we consider these developments, it's essential to approach investments with a critical and nuanced perspective, taking into account both the potential opportunities and risks associated with each company. We'll continue to monitor these trends and provide you with timely insights and analysis to help you make informed investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of artificial intelligence and finance as we explore the latest developments in the tech industry. OpenAI, the company behind the popular chatbot ChatGPT, has filed confidentially for an initial public offering, or IPO. This move comes as the company is valued at $852 billion and is targeting a stock market valuation of up to $1 trillion. Now, this is a significant story, not just because of the massive valuation, but also due to the implications it has on the broader tech industry and the economy as a whole. OpenAI's decision to go public is seen as a test of investor appetite for AI-related companies, which have been receiving significant investments in recent years. It's worth noting that OpenAI's journey to this point has not been without its challenges. The company has faced criticism over its profitability, or lack thereof, and has been engaged in cost-cutting measures to maximize revenue. Additionally, there have been reports of internal conflicts over the company's IPO timeline, with some executives expressing concerns about the company's readiness for a public offering. Despite these challenges, OpenAI remains a leader in the AI industry, and its IPO filing is seen as a significant milestone. The company's success will likely have a ripple effect on the broader tech industry, and investors are eagerly watching to see how this plays out. It's also important to consider the potential risks associated with investing in AI-related companies. Some experts have warned of a potential bubble burst if demand for AI technology does not meet expectations. However, others argue that the long-term potential of AI is significant and that investments in this space are necessary to drive innovation and growth. As we continue to monitor developments in the tech industry, it's clear that OpenAI's IPO filing is a story worth watching. We'll be keeping a close eye on how this unfolds and what it means for investors and the broader economy. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to two intriguing stocks that have been making waves in the market: eBay and PureCycle Technologies. Now, I know what you're thinking. What could these two companies possibly have in common? But bear with me, folks, as we delve into the world of investment opportunities. First off, let's talk about eBay. The e-commerce giant has been around for decades, but its stock has been experiencing a bit of a roller coaster ride lately. With a forward PPE ratio of 142.86, some investors might be wondering if it's time to jump ship or hold on tight. But here's the thing: eBay's polypropylene purification plant is not just any ordinary facility. It's a game changer in the world of plastics recycling, and with regulatory clarity on the horizon, this stock could be poised for a significant comeback. On the other hand, we have PureCycle Technologies, a high-risk, high-reward play that's all about commercial scale-up and capital structure reflexivity. With a short interest near 40% and a stock price down around 70% from its highs, it's clear that investors are skeptical about this company's execution and credibility. But what if I told you that there are three catalysts on the horizon that could change everything? Potential NJDEP approval, accelerating customer conversions, and a ramp in Ironton utilization could all contribute to a 25–50% short-term upside. Now, I'm not here to give you investment advice or tell you which stock to buy. As your host, my job is to provide you with balanced information and help you make informed decisions. So, let's take a step back and look at the bigger picture. Both eBay and PureCycle Technologies have their pros and cons, and it's essential to weigh these carefully before making any investment decisions. As we close out today's show, I want to leave you with a word of caution: investing in the stock market is never a sure thing. There are risks involved, and it's crucial to do your research and diversify your portfolio. That being said, for those who are willing to take on a bit of risk, these two stocks might be worth keeping an eye on. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.